All right, the grind continued today to the upside for some, to the downside for others. So I'm going to talk about why we're kind of grinding and yet still maintaining a very strong bullish trend. And we'll take a look at the different indicators and what they look like after today's move. Pretty interesting moves in different asset classes and different sectors that kind of underlying telling us a story about this mature trend that we've been on. So we're going to break that down in today's video as well. Our trade idea comes from a sector that has been by far the biggest winner over the last 6 months. This 6 month run we have one of the biggest sector winners that we've had. That since has had its own little decline on its own per se, but then showed a nice little bounce breakout pattern. We're going to talk about how to deal with a really good bullish pattern on expectations of of trading that in a very mature trend and how much longer we can trade this directional type move. So we're going to talk about that with our trade idea for today. So let's go ahead and get started. Today is Monday, May the 3rd, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's go ahead and get started and take a look at the market forecast with the the S&P 500, with the market forecast indicator. As you can see, today's range still pretty much in last week's range, so not very much of a move. Again, very small range of 21 points, and not very much of a move. Again, when you look at it from this perspective here, very small, relatively small gap, and today's finish was actually smaller than the gap. As you can see, we gapped up 0.5%, and we only finished up less than 1/4%. So very, very low historical volatility. We keep having to really drop this down to now, where is this, 0.0992? Let's see where it's at. 0.0922. 22. Didn't do it. Let's try this one more time. 0.0922. There we go. So really, really low. Again, we saw this kind of going into the end of the year. Of course, that was holiday season. That's why it was so low there. We also saw this going into that September peak, going out a few years, just for some perspective. It's still higher than where we saw like all of 2017. So keep that in mind. Go back to the market forecast chart here, and you can see the near-term line continued lower into the lower half of the chart. Did not get to oversold levels, so didn't quite get a bounce in the after the Friday intermediate confirmation signal we talked about, but we did. I mean, 1/4%. We just didn't get we're just not really starting a new near-term rally yet, as we haven't jumped up above 50. I bet you we're going to have to probably break out of this little sideways range for that to happen. Obviously, a very small move like this is not going to have a very big impact on the intermediate line or the market sentiment line. They're both still very strongly bullish. On the NASDAQ, the near-term line, we did have more of a fall. Fell about 0.5% there, and you can see we didn't really close. I mean, we got pretty much to last week's low. You still have this intermediate line that we're on here. Sorry, let's do this. Let's move this up to the new high. We're still not below that 23% retracement. You have to get below those lows for us to really get the beginnings of a near-term decline. Though, again, getting an extreme low on the market on the momentum line, this kind of how we saw over here, and then getting a pretty significantly oversold near-term line. These are pretty decent signs that we might break through that. So that's something to keep an eye on the rest of this week. The Russell 2000, again, also had a bullish intermediate confirmation signal. Did not play itself out necessarily yet with a new near-term line, as that near-term line still continued lower. Hasn't bounced back up, and of course obviously hasn't jumped up above 50 yet either. Regardless, you still have bullish market sentiment that hasn't crossed into the reversal zone yet, and you have a market sentiment line that's still falling, as we're still not really confirming that little breakout that we had the week before, at the beginning of last week. Monday last week, it looks like we kind of broke out right there, but then we really didn't confirm that. By the end of the week, we actually finished lower than the week before, and then today just a small rally there. So still very strongly bullish. Remember, we finished the month with an overbought cluster There's some really good tweets, some really good data on strong Aprils I shared with you on Twitter for those who follow me there from Ryan Dietrich. So check that out. Kind of confirms what we've been talking about on Friday and what we talked about in class this week as well, is that most likely May is not going to be the down month. It's most likely going to be June that ends up being the down month. But I wouldn't be surprised if May ends up kind of a sideways grinding month with a little bit of a bullish move, but just not nearly as positive as what we saw last month in April. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us that you liked our video today and that you want us to do another video again tomorrow. It's a quick way to give us feedback if you like our videos. If you don't like our videos, of course, you don't have to click on anything. But if you do like our videos and you want to let us know, you can do it right now with one click, even while you're watching here. So we always really appreciate that. It really helps us out and lets us know what you're thinking. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. You get access to our Market Outlook forum and our community with your free subscription, among other things. Follow me on Twitter for more content in between the video from day to day. There's my handle right there at DavidSettle42, and join our Market Outlook Facebook group that we've created. All right, if you're watching us on YouTube, I invite you, on our website, I invite you to check out these things over here on the right, including our Market Outlook live video, our trade review video, where I review all the Market Outlook trades I've done. I do these every day. I do the Market Outlook. I do it at 3:30 Eastern time. Before the market closes. Click on this to see all today's as well as any archives. Coming down here, and you can see our upcoming trading rooms that we have. All of our paid subscribers, our monthly and our premium subscribers, have access to all of these things. Over here on the right, of course, our premium subscribers get access to all of that at a cheaper monthly rate than our month-to-month do, as well as they get also get access to our class forums and all of our premium tools in addition to all of that. Come down here, click on this heart. It opens up a new tab. Hit this like button right there. Also hit this thumbs up icon. Opens up another new tab, and you can hit that like button here as well. Again, the more you do that, it really helps us out because more of people who follow us will see our content because of the engagements that these posts have. It also benefits you because the more you Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here. All right, now let's take a look at the long term, the weekly chart here, and you can see, again, PPO above 9%, very high PPO, very strong, but it also means falling candles, smaller candles. I've shown you this chart before when I show you the Heikin-Ashi differential here, just to kind of show you how big the candle bodies are. That's what the purple line, or excuse me, the green line is. The purple line is a three bar average. So you can obviously see the bars are getting smaller and smaller, and of course it generally leads to either to zero and we bounce up, or it leads to zero and we cross over. So we'll see how this does. I mean, this was a relatively high candle, or the bodies were getting relatively big. Of course, this is on an absolute basis, not a relative basis here. Let's take a look at the 3 green arrow chart, and you can see that we have 1 red arrow. Obviously, we're above the moving average, so that keeps it green. The stochastics is also still above 75, so that also keeps it green. When you look at the 2-line versions, though, you can see both these lines are still below their moving averages. That's why we're grinding. We're not really going anywhere because they're both falling and they're both below the moving averages, even if this stochastic is still above 80. But that's what happened. They're still above the 8-day moving average, but these lines are starting to converge, and that's what the MACD dropping below zero means, or towards zero, excuse me, is that these lines are starting to converge there. So that's the type of pattern that you're seeing. You also see it on the directional movement index. It's got a very, the ADX is still rising, but you can see how we're starting to grind. We're still positive. That's why the negative directional index is moving so low. But the positive index is still staying up above 25, which means we still have a persistent directional move If you look at, excuse me, not that one, the RSI and the CCI, we're still up above 60, so we're still grinding in this bullish trend. We're still up above zero, between 100 and negative 100, but at least we're up above zero there. You look at the Bollinger bandwidth, we're still in the upper quartile of the bandwidth here. Even if the bandwidth's a lot smaller than it was, we're above the value area, so we're still maintaining a very strong trend, even if we're not pushing up any longer. It's hard to break a strong trend when it's going. You've got strong momentum. It's really hard to break that. As you can see on the weekly chart, we're well up above the green line with a very, very strong move here, and that's why we're still persisting. That's not necessarily the case on the Russell 2000. On the weekly chart, it's still very strong and high. On the daily chart, of course, very noisy, as we're still barely above the cloud. We're still positive in that regard, but not nearly as strongly bullish as we've seen in the S&P 500 or the Nasdaq, for that matter, which is very close to now ending this strong bullish posture or strong bullish trend it's had, as we are breaking down below the green line here the last couple of days and potentially moving towards that blue line. That's what ends up happening when you break the green. When you have a gap, sometimes the gap's not very big, but when you have a gap and you break the green line, you tend to make a move towards the blue. So over here we come down and pop back up, but this time we popped down on Friday and we've kind of stayed down today. So we either pop back up, or there's a good chance we start filling in that gap, at least towards the blue line. Now let's take a look at the intraday chart here, and you can see what it's looking like. The little bit of a gap up that we filled in some of. That's why the gain of 0.25% was less than the gap of 0.5% higher. Obviously, the point of control is still way up here, and you can see how we're still inside of last week's range. That widened out a little bit on Thursday and Friday, but still staying inside of those 2 days range there, with a little bit of a drop in volume, is what we saw. If you take a look at the volume here, still relatively high compared to what we saw early last week, but down from what we saw on Thursday and Friday. And like I said, the range only at 2 points. So when you look at this on this chart, still very, very low PPO, still well below 1%, and the volume just a little bit above that average, so still falling. So it's still bullish when you have these low levels. And here we go with the VIX. We talked about the idea of the VIX dropping today since we rallied up into the close on Friday. And we dropped a little bit, right? We're still in the high teens. And like I said, it's if we kind of meander around this 90 to 95% mark, it's a lot easier to start an intermediate trend from there than it is from down here. An intermediate pullback, from there. So we're not quite there yet. So that's why I'm not too worried about it yet. But you can see we didn't get back down towards 80% today, so we're still kind of holding some volatility here as the market's got a little bit of, it looks like a little trace of anxiety going into a typical less bullish time of year. Not necessarily bearish is what gets a lot of publicity, but a less bullish time of year than what we typically see in the beginning part of the year from a seasonality standpoint. So to summarize the technical outlook, obviously we have a persistent bullish trend. It's grinding. We can see how some of the indicators are not really that strongly bullish anymore, especially like say on the IWM. But we're also not breaking down, and we're probably still a week or two away if we were ever to break down, which obviously we will at some point in time and have an exhale, which wouldn't be the end of the world. A lot of people will think it's the end of the world because we always think that every little bit of selling is the end of the world, but the reality is when you go up 90% over the course of a year plus, a 10% drop is not going to be nothing, right? It's going to be nothing. It's going to be, a lot of people get concerned because 10% drops, it's a round number that gets a lot of publicity, but it's always put in context of the rally that preceded it, and considering the rally off of the election day, that Halloween low point, 10% rally is not really much of anything off of that either. So we've had a really, really good bullish run. It's running out of momentum, but it's not turning around yet. And at some point in time it will. But we're, like I said, even with what we're seeing today in the technical indicators, we're still probably a week or two away based on how still persistently strong the trend is, and the bullishness of some of the indicators that we have that are still sitting at bullish levels, not necessarily pushing us higher, but just kind of keeping us higher, but grinding away at still bullish levels on these indicators. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. Let me know why, what indicator or chart you're looking at that tells you why you're either a lot more bullish than I am, or why you're a lot more bearish than I am. All right, now let's take a look at the what's driving this price action. So let's go here to the asset class and take a look at what happened here on today. And you can see, of course, the bigger movers, the big driver was the bounce back down in the dollar, and that pushed gold up higher, a significant move higher. Bonds started off the day strong, gave back some of their gains by the end of the day, and commodities really rallied higher. So a very kind of anti-dollar move. Emerging markets didn't hold up so well. Developed markets doing a lot better there. But like I said, a very anti-US dollar trade, and that's kind of what we saw with the bounce back in the dollar here on the euro. So very, not getting back above that 38% retracement level that we broke down below. So we'll see, but obviously retracing about half what the euro lost. So we'll see if it continues that or starts to roll back over with where these indicators are in the lower half of the chart here. So that's been a big driver of the price action today. Gold has made an interesting run, jumping back up above kind of this this flag pattern here, breaking back above the 23% line. Obviously strong bullish posture, dark green shading, and a green line. Remember, that can persist even with the dollar rising. And then long-term bonds. If we take a look here at the yield, which obviously is an important factor as well. I mean, the rising yields is what's really been driving a big move higher in small cap stocks, with falling yields being a bigger advantage for like large cap tech stocks. And you can see the yields are turning back down. So TLT didn't really jump significantly high, because remember, this is 20 to 30 year excuse me, but the 10-year note, which is what everyone kind of keeps an eye on, that was a pretty significant drop, breaking through some lows late last week, back to a red line on the moving average. Obviously still light green shading, but with the near-term line rolling over without getting really strongly bullish. We'll see if there's any follow-through on that tomorrow. That could lead to dark, because once it turns over here, it'd be dark pink shading on the intermediate line. So that's an important development. Again, that would lead to outperformance in the Qs over IWM if yields were to continue to roll back down. Even if there was a little bit of underperformance here to the moving average, you would expect this to turn back up. And again, we've talked before that if and when this does turn back up and make a pretty decent run, it will most likely be during more of a decline in risk appetite, not so much like we've seen in the past of a driver of risk appetite, because this downturn here in this relative strength line is what drove the latest bout of risk appetite. As you can see, the trend has been really light lately, a little bit of a jump up the last couple of days of the month, up to 1.5. But you can see that like we've been kind of plateauing here right around 1, a little bit above 1 on the 20-day moving average. Again, bringing this down while we're still bullish sets up for a potential rise in that 20-day moving average, which, like I said, could also which more often not coincides with risk aversion, not risk appetite. And of course, we take a look at the relative strength, but I wanted to take a look at different asset classes here, and you can see this is the commodity-based index, still very strong, but losing momentum. There's another commodity index, and the U.S. stock market index. Real estate holding up, so a kind of inflation type move. There's your government bonds still lagging behind, and corporate bonds lagging behind as well. And then your US dollar. So, very much a risk, an inflationary type market with stocks not really outperforming very much, and bonds really, long-term bonds especially, really underperforming. So still kind of a risk on, but not really the most risk on type of environment. Kind of like we're still bullish, but we're kind of holding on as long as we can. Remember, the intermediate run's been going on for nearly 6 months now. All right, now let's take a look at this chart here, and you can see today's move from a sector rotation standpoint. Energy making the bigger bounce back today, is where our trade idea is going to be in that sector. Materials, again, kind of an anti-dollar move. This, like we saw from an asset allocation standpoint. Some of your safe haven areas, healthcare and staples, doing well. Financials, industrials, so kind of a small cap move, so to speak. A lot of these sectors are more highly correlated with small cap stocks, even though these are all S&P 500 stocks. On the other end of the spectrum, technology, discretionary, communication services, real estate, all your recent winners all down, not just lagging, but down today. So again, tells you don't put a lot of weight into this gain, because they started off strong, but by the end of the day finished really weak. And that's not a good sign when those areas finished down. Now, granted, during a pullback, they're obviously you would finish down too. These areas here that have been so volatile and have been such big winners, you would venture to guess, because again, you go back to, like I said, that for the Russell 2000, the low point was there on September 24th of last year. They obviously have much bigger gains to give back. Energy and financials especially, industrials and materials to a degree, more so than you see from technology and discretionary, which are still lagging behind the broader market's 30% move off of that particular low point. Let's take a look at the 12 grid for the sectors that we see here, and you can see the pullback on technology and basically just coming back to moving averages. Industrials, financials, materials also very high above their moving averages. Staples, utilities bouncing off of that, as long with healthcare. So a little bit of a rotation here that we're seeing into the safety trade. So here's the daily chart here. Sorry, there we go. There's our daily. Let's go back to a daily chart. There's our daily chart. There's financials, industrials, energy ramping up, utilities. There's there in red, and staples have been underperforming. Real estate's been a big winner, but appears to be rolling over. Healthcare as well. All laggards behind, and your small cap areas are rotating into favor, with your large cap areas rotating out of favor there, aside from communication services. So kind of a sign of the rotation that we're seeing back into these areas, these small cap sector areas that have been so strong. That might be, again, like I said, making one last push, because when you look at their weekly chart, they're the ones that are all losing. Communication services, industrials rolling over, financials, energy, and it's XLP, XLRE, and XLU that are all moving up on a long-term level. All right, now let's take a look at Valero. When you take a look at it, starting a new bullish posture here. Strong bullish posture, dark green shading and a green line. Market sentiment falling still, but the intermediate line close to crossing over. When you look at the 3 green arrow chart for Valero, obviously you're above the moving average, but now the 8 and the 17-day moving averages are crossing up above the 30 as well. The MACD is positive, stochastics is strongly bullish. The moving averages about to cross below 0, crossing above 60 there. You can see the directional move occurring on some of these other indicators here. Above 30 on the positive indicator, already below 20 on the negative, so you have a rising ADX. You have an RSI and the CCI that are breaking to strong levels, well above 100 on the CCI, above 60 again on the RSI. From a Bollinger Band standpoint, you're breaking up above the bands, with the bands still inside their Keltner channels. But a good little breakout there above this little volume node that's right at the top of the value area. So we're above the value area. So we have a really good opportunity for a little bit of a directional move. Good bullish candle in the Hakenyashi here after not being so bullish, getting a pretty decent. So again, to kind of show you what the Hakenyashi differential looks like, I told you about before. Sorry, let's try this one more time. Hakenyashi differential there we go. We were below zero, and now the three period, is crossing up above zero with this average move turning from negative to positive. So a good opportunity for a directional move. Again, of course, energy is losing some long-term momentum, so I don't want to be too strongly bullish here. So what we did was we did a bull put spread where we sold the 75 put for June. We don't have to worry about earnings. We're already through earnings. So that's the nice thing about this particular trade is you're already through the earnings there over here. So we did a bull put spread at 75.70. We got position size for a full position over here because we don't have to worry about the earnings. Got a pretty decent reward, well above the 30% mark. In fact, above 45% mark for the return. And that break even, as you can see where it sits here, here's the breakout. Oops, excuse me, let's bring up the Valero here. Here's the breakout with the gap up, gapping through some resistance. If you look at a little bit of a longer term level here, you can see that this little gap is breaking through this high that we had over here in late March. And obviously we gapped up through, once we gapped up, we just kept going up. So we didn't fill in any of that gap at all this morning and gapped up through those highs from last week. So very kind of a breakaway type gap move with some relatively decent volume. When you look at the 3 green arrow chart here, here's the 3 green arrow signal that we got in today's volume, higher than what we've seen. So a little bit of a breakout move, and with the opportunity to make a pretty decent run. And again, if we can get 50% of our maximum gain within 26 days before we get to that 20-day expiration mark, then we'll roll it and see if we can't get even more return out of this than this $462 out of that same $1,000 risk. All right, so that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new thread. Remember, all of our subscribers, even our free subscribers, have access to that. So open up any new threads, reply to anybody else's threads in that forum, and let's keep this conversation going in between videos here. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, as well as like us on Twitter and Facebook too. Comment on the video. Have a great rest of your Monday night, everybody, and we'll see you all next time.